this gap is going to react as bullish market price. Let me So if the current M15 candle it closes above this gray shaded area, which is this M15 fair value gap, then I believe it's going to rip through this and take this liquidity, this, and going ultimately to this. So let me mark this zone for you. Sorry, it has already reached these targets, so I would take the same thing here. So let's see how it goes up there. It has got a strong bullish momentum and it's going to rip through it. So if we see that 1 minute gap, see how it reacted, it just clicked into it and started moving higher. So if we would have bought at this point, we could have placed our stop loss below this candle's low or below here. That would be a better stop loss if we put it here at 2165.7 and bought here from 2169.8. That's like $3, and our target is at 2187. That's quite high. And it's around 1 ratio or 1.1:5 RR, looks like that. Let's see if it goes there. So the current M15 candle is going to decide a lot of things. Where it closes. Let me look at M5. It's going to go there, guys, at least above these highs. So that would be our first target at 2180, and this would be our second target, 2186. Stay patient, everyone, guys. That's just my sneaker bar. Let's see how this M5 candle reacts from this gap. Should be strong reaction. Approaching the equilibrium, or maybe just 25% of the gap. So now if we are in a trade, we should move our stop loss from here to this point. That is our entry point, and I believe it's not coming below this zone again, and it should start moving higher from the current gray shaded area. I will mark this and red. That's our stop loss. Our target is way higher. Let's see how it goes there, or it hits our stop loss, which is moved higher to the entry point. It's Asian session, a bit slower than the other sessions, but let's see how this M15 candle closes. If it closes above this, guys, it's gonna show strong reaction in the next candle above these highs, which is 2180 level. Even if it closes above the mean threshold of this fair value gap, it would still be bullish for me. But if it closes below this, then that could be a reversal to this blue zone. That is a 5-minute fair value gap. It looks like it's gonna close above it, and if it does that, you know what I just said. Okay, just a few seconds to go. looks like it's gonna close above it. Yeah, that's great. Now it could visit the equilibrium on this candle and starts moving higher, or even it could start moving higher from right this point, but better if it comes to this equilibrium and then starts moving higher. If it's extremely bullish, then it may not come back to fill its leftover PD raise, but if it's not that much bullish or bearish, I mean, if the trend is not too strong, then the markets come back and fill its voids and takes the liquidity on both sides. But if the market is uh, bullish or bearish and the momentum and current sentiment is strong, then the markets may leave behind all the PD arrays and start going into its trend side without filling and taking the liquidity on its opposite side. Okay, looks like a little move, wanting to go higher. Here, baby, come here. Let's have a look at 5 minutes. Yep, that's moving absolutely bullish scenario here, and this order block which it has just made on 5 minutes, that could also play a role for sending the price higher again. It's too slow, man. So this was our first target here. we started moving, let's rip the target one first. We have got a nice 5-minute candle, last one, and we have not anything in here to reject the market back lower except this invariant fair value gap, which let me just mark for you. Yeah, so this gap could react on it, but if even if it comes back from here, it should not, or it cannot, it can actually, but it should not go below this order block, because that's our trade criteria says, and that's how I trade actually. So if it gets below this order block, and we are not gonna change our stop loss or move it higher, because it's already at our just at our entry point, which I showed you here. We are not actually trading the markets here. I'm not licensed to do that, but I'm just showing you how I read the price, and how I react at the market on the lower time frame, looking at its price action. So it already has, our first stop loss was here, which was $3 from here, 2069 to 2065.9. That was 2066 to 2069. Yeah, that was $3.50. And now from 2169 we have reached 2175 levels. That's almost $5.50, and which is almost 1:1.8 RR, which is actually very good. And in the beginning we should just target 1:1 RR. That enhance your precision and accuracy if you target 1:1. But as we are not right now, we are not into the markets, and we are just paper trading here. So we see that it's gone to its PDRA, which is an invariant fair value gap. Now let's see how it reacts here, and if we are trading this, we should take 20 or 30% of our trade here. And that's not bad, because we have almost hit 1:2 RR, which is quite a nice profit, I believe. But we are still going to stay on the charts to see if it gets to our target 1, and then our final target, that is 2186 to 87 level. So if it rips this gap higher, it's not gonna stop, I'm telling you. But if it doesn't, then we may hit our target 1, but we may not hit our final target, which is like more than 1:5 RR. I will put its middle line, that is its equilibrium. we see a strong momentum, bullish momentum, which I don't think the gold would stop, because if we see it's on a nice move higher from a long time now, and the current leg is also have actually, when we are in a bullish trend, every bearish move is a suspect move, we need to buy it. Okay, every bearish move is a suspect move, we need to buy it. Every time it falls to a fair value gap, or it falls to an order block, we need to buy it. And until the trend changes, which is shown by higher time frame charts. And if it's at a PDRA on the opposite side in the dealing range, that could be something for getting the idea of the market reversal, or the trend shift, or the market structure shift. Anytime we see these type of things on higher time frame, we get a lot of trades on the lower time frame for the same bias which we used on higher time frame. We should always align our what we say. Sorry, I was just using my phone, I forgot what I was gonna say. But yeah, let's keep watching this thing. It's willing to go higher, but maybe the current 15-minute candle has finished its volume, and has already moved $4 to $5 now. And it was this current candle started touching this low and went to this low. So I think this is going to close in between these two gaps, and the next candle is going to decide what she's gonna do, because we are near to the 1 hour closing as well. So let's go on 1 hour chart. What it tells us here, we had this 1 hour gap. So on 1 hour chart, it could, let me hide this for a sec. So on 1 hour chart, if it comes back down in the next hour, it should not go below this candle, which is the Sunday 24 March 2024 20 00 candle. So this would be reacting as a bullish order block, because if we see this candle has sent it way higher with a strong volume, which means this order block is of great importance, and it's gonna go play an important role later as well. Let's get back to the 5 minutes chart. So this 5 minutes candle is doing some retracement. Let me put back the lipstick. Yeah, if we see, this has rejected from this high fair value gap, may not go below this zone, but could go as well, because the markets are highly uncertain, and we are not sure of anything at any time. We are just trading the probabilities. I don't know why my broker is not letting me trade, but I will soon sort this all, and will get back to you very soon. The video is getting longer, but stay patient. The tape reading is not noise, It's something which has helped me a lot when I learned from ICT, and this was the best thing which he used to do. He used to put the live streams and keep talking about tape reading and about the charts for hours. Uh, Unfortunately, I am not that professional in YouTube. I'm not a professional YouTuber, but also I'm a learner. I'm not an expert like ICT, but still I'm showing here what I see in the markets. Hope you are getting some useful insight from my videos. Please do like and subscribe to my channel if you see any useful content here. Thanks in advance. So I'm gonna wait for current hour, or maybe not, because it may start going higher in the next hour, and the video would be longer than what I was expecting it to be. So if it doesn't go there for now and I close the video, that is something for you guys to study and have a look at how the markets reacted on these areas and how they went to the targets. Okay, so I would just monitor the current M5. So if this candle gets into this fair value gap, the small little one, if you see it, let me highlight that one as well. The gaps like this, they look like nothing, but they actually have got something in them, and they are not noise. Believe me guys, they are not noise. We will see how this gap would reject the markets. I would take this off for now, because this is not something related to what I explained or outlined here. It's just testing my patience, but I have made strong M15 candles. I am telling you guys for later, this level would also be, I think this has made the low of the day, and where did it open? Yeah, it opened here, went a little bit up, came back down to this liquidity, and yeah, this low is going to be the low of the day until it hits my target one at least. After that, I don't care even if it comes back down and rip this out, but that doesn't matter, because we are not trading that thing. We are in the scenario which is offering us the price to go higher right now without going below this, and currently our stop loss is at here at our entry, but this was our main stop loss which we squeezed up here, and it pushed back market higher to this fair value gap, ripping this one, the gray one, and going to the red one. So that's what the market does, guys. It just move from one PD array to the other one, and let me see what it is doing at this. Yeah, so this gap I've just marked for you guys. Let's see how it reacts. So this 5-minute candle has just started 50 seconds ago, and tap this small little fair value gap, and if it the 5-minute candle closes below this gap could also get inverted and starts moving lower towards this order block, this black candle, you see it. If it closes below this, it's coming to this one. If it closes below this, it's coming to this fair value gap where our stop is. But because I'm bullish in it, I'm not willing to risk below this PD array, that is the order block. If it comes here and doesn't get rejected and starts closing below this equilibrium, and then comes below this gray shaded area which was fair value gap, then I'm out of the trade. I would squeeze my stop loss now from entry to here in the profits, which is just a little profit, but at least profit. It's not about a little or much profit, but it's about learning the markets. Okay, so I think the markets for now I have told you guys everything which is present there right now, and I'm not sure if there's anything else I need to show you guys in the current market scenario. That's all for now, which is I would change this gray shaded area to this black order block, which is going to be our latest PD array of importance. If it gets rejected from this one, it would be a strong rejection as well. So this fair value gap has not shown much respect for 5-minute chart, but let's see on 1 minute. Yeah, if you see, it came down into it, closed above it, then next candle ripped through it, and the next candle just clicked it, which I just told you that if it doesn't gets used for the bullish scenario, it would get inverted and send the markets lower. So if we see, this candle didn't close below it, this candle did close below it, and the very next candle went back up here, just clicked into it and started moving lower. We could just sell at this low and put our stop at this candle's high, or this candle's fix high. Okay, and that would be just 2174.77 to 2175.03. That's less than a $0.50 stop loss, which already has given us, look, from 2174.7 to 73.8, which has already given us almost $2 of profit. Means what is that, 2174.7 to 73, no, that's $1 profit. That's almost 1:2 RR. And if we are bearish from here, we could just keep our stop here and take half of our stop loss, half of our target here, and keep waiting for down here. But I'm bullish. I'm just telling you that we can do trades in the opposite direction of our bias as well, based on the PD arrays and the market structure shift. However, it shows us we have to obey that, and we don't have to put our own will on it, that if it has to go up, then it should go up. It can go anyway. The algorithm is set to do that, and wherever they want to take this, they do take it. Okay, so the video is getting longer, and I'm not sure how many of you are still here watching the video until this point. But even if you don't, just have a look later on the charts. Maybe by the time you would be watching this video, the live market charts would have unfolded a lot more, and you will be understanding how these market prices and market areas reacted. Okay, so for now I'm closing this video, and hope you have got some useful information for learning here, and take care of yourself. I will be posting more analysis and live market videos here, so that you can learn from me whatever I know about the markets. And I would also fix the issue with my broker, that why I was not able to put the trades today. I'm not sure, it has never happened before, but maybe they have shifted the platform from MetaTrader to DXTrade. That is the reason they are not letting me the trade. But I have checked, and I have tried to putting a trade on euro dollar, and that was working well. And so that's it for now, guys. Take care of yourself, and we'll see you soon. Bye.